This is Steve Georgie with the Allendale After the Bell commentary. Wanted to go over a couple things. We're going to go through a couple charts today and look at some different looks here at basically market flow. We're going to look at corn, beans. We're also going to talk a little bit about the stock market here today and some of the flow that we've seen. So we're going to take a look first at this corn chart. December corn right now, we did drop back today about 10.5 cents. This is December corn. These are the lowest levels that we have seen in corn since June 18th of last year. So this is very important because basically the trend right now, we are in a downtrend. And as you can tell from here, we're still in this downtrend. We took out some of these previous lows, and we've got this kind of the stair-step type approach. If I was to blow this chart up a little bit more and go back all the way to June of last year, the low that we had put in was on June 15th. We had a low in this December contract right at $5.11. That was on the 15th. The 18th, we did end up making this low right at this 5.16, 5.15 area. But today, a low of 5.18. So we did try to recover a little bit. We closed right at 5.22 1/4. But things to remember, we are still down. The trend is still down. Until we can take out these highs right here, it's going to remain in this bearish type trade. Now, the weather out there, it is warming up. A lot of forecasters talking about this warm up that's coming. That will be more favorable for farmers to get out in the fields. But we've got to consider right now there has been a lot of rain. Good to excellent ratings are sitting at 4%. And next week, I'm not looking for a big jump here either. But if it does remain warm and we do get some more planting progress to really take effect in the next week, that may change. It doesn't take us long to get this in the ground. But right now, overall, today's close for corn, still pretty negative close. We are at some very important levels, though, on the lower end. As far as beans, you can still see this downtrend that we've been in. And we did push into some new recent lows again for beans. Once again, if I was able to push this chart out a little bit, you can see that there were some gaps that we had in this chart that we have now gone down and filled. So our first gap that we needed to fill was at 12.07. We certainly did that. As you could tell, 11.94.5 is where we settled today, down 6.5. But also, there was a secondary gap that sat at 11.95. We did go down. We had a low today of 11.90, and we were able to fill these gaps. So it'll be very important to see what we do over the next few days. But part of the reason why we've seen this trend and we've seen this market in such a negative fashion, mostly because, well, if we can't plant corn or if we have planting delays, what are we going to plant? We're going to plant beans. Okay, now, guys up in the north, if they're not, they've got snowpack. They're looking at planting spring wheat. Well, if they can't get the wheat in the ground, what are they going to plant? They're going to plant beans. So beans here, new crop beans, are certainly in a downtrend. As you can see, we've been oversold for the last few weeks, but that does remain. And we need to see something new come in here to maybe push this thing higher. Well, what's that going to be? Export sales, we sold 392,000 new crop beans to China this morning. So that was reported. We had another sale yesterday morning. So maybe we can see now that we're at these lower levels and we've filled some of these gaps, can we start to hear some better news out there? Maybe demand can pick up at these levels. But right now the charts are still negative. We did push into some new recent lows again here today. Something I want to show you guys. This is the 5-minute Dow. This bar, these bars that you're seeing right here, we had a nice solid day. We were working higher. And then all of a sudden, there was a report out here that AP had reported 2 explosions at the White House. And you may hear about this. I know they've been talking about it on the news and through the news wires, but look at what had happened here. You saw about a 150-point dive, all in a matter of, 10 minutes, 5 minutes, and 5 minutes, 10 minutes, and we were back to normal again. And the reason for that is that it was confirmed that it was someone had hacked into their Twitter account. But the story is fake here at this point, and the market had recovered. We do have the stock market up right now about 122 points, but why are we showing this? As I showed you these last couple charts, you had commodities that have been working lower. Crude oil down today. The grains working lower, but it's commodities in general working lower. The dollar has been working higher, but what it is money flow. You're seeing a lot of money come still out of commodities and back here into the stock market. Stock market's been on an uptrend. We've been working higher basically since the beginning of the year, and it looks to continue. Very strong days that we've seen the last few days, and we're finding this as more money flow. The metals market, they started this last week. We talked about gold and silver that got that had seen a large decline early last week. Well, here they're down again today. But you know, a lot of money coming out of commodities is what it seems like back into the stock market. So give us a call. We're here to help you guys out. You can reach us over here at 800-262-7538, or check us out on the web at allendale-inc.com. But I hope you guys had a great day today. We'll talk to you again tomorrow. Thanks.